Welcome to Market Movers. I'm Jim Urio, and today we're discussing the current trajectory of the U.S. economy as measured by some of the recent economic data. Joining me is Chief Investment Officer at Kingsview Asset Management, Scott Martin.
Hi, Jim.
So we've had a run of some pretty decent number. Philly Fed, housing starts, labor number. Is it the real thing?
I believe it's the real thing from the standpoint of it's better than it was. And it's backing up this anticipation of the Trump presidency and this improving economic data. But as you've seen lately, Jim, as a trader yourself like me, there's been a lot of little other economic events or other black swan events potentially coming in with D.C. machinations, healthcare, things like that that are changing the landscape a little bit.
No question about it. And all those affect markets as well, too. Some instability, we'll call it, in a lot of different areas. Now, what do we have to look for on the horizon? Is it the durable goods number, the PMI number, or do we have to wait all the way to the next labor numbers on the 7th?
Well, so the durable goods and the PMI almost sets up that number on the 7th, in my opinion, because those are kind of like the appetizer to the main meal, which still remains GDP, and in this case, the non-farm payrolls number in April.
Okay. Now, before we dive into our trade discussions, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as trade recommendations. Prices and movements will vary in the markets. Right now, we're talking about these. We're pricing the June contract at about $23.44. Scott.
So, looking at the market lately and talking about how the market has reacted, Jim, to what has been maybe some of these more unanticipated events. I punched up a couple put spreads this morning, and I thought, gosh, there's a lot of protection being purchased out there these days.
Amen.
It's kind of expensive. So this goes back to the trade of taking what the market gives you. So specifically, I looked at the end of month. So we're not going up to the non-farm payrolls day. It's going to expire on March 31st. The 2350, 2360 call. It's going to cost you about 5 ticks. So you're going to risk about $250 to make the potential 250, but still have a little upside here as I think the sentiment's going to calm down a bit and the market is bound to rally and recap some of the big move that it made earlier this week.
So we're 6 ticks underneath the bottom strike.
Yeah, about 23.44.
So what that's telling us, in the next week, it's 50-50. That's why you're paying $250 to make $250. I like it. So if you're a little bit of a bull, and in my mind, it's almost certainly going to be.
And protection, remember, was running a little expensive in my opinion, right. So you're getting a little bit better deal on the call spread.
And I like it too. I am also slightly bullish after the big pullback we've had. So I'm looking at buying the week 1 April 2360, 2370 call spread for 4 ticks. And this is 10 wide as well. This trade is an expiry April 7th. Now, I picked that, you know why? Because that's the date of unemployment. Okay, this trade risks 200 to make 300. So it's almost similar risk reward as yours.
A little higher, a little more time. And that's what's funny, Jim, is when I think about putting on trades, whether it's put spreads, call spreads, or even just calls and puts alone. When there's this uncertainty or things that happened like yesterday with the market moving big on the Tuesday data points and things that were going on in D.C., I tend to bring my trades in a little bit shorter in the sense of bringing them closer to me on the calendar just so maybe I eliminate some of the uncertainty that happens the week after,
and I think mine is kind of similar to that. It's a few ticks higher, but it's a week longer. So
which is worth maybe the risk-reward potential.
Well, that's interesting. Thanks for joining us in this special edition of Market Movers. I'm Jim Urio. We're helping to make you a better trader.